I think we do have N Jayakumar now joining us. Yeah, I think we can go across to him. Jakes, hi, good afternoon. Always a pleasure having you on the show. Thanks for joining in. So it's been interesting for the market because we've kind of gotten trapped into this range. And I think a lot of people are trying to figure, because this whole global narrative has also turned fairly somber. Everyone's talking about perhaps, stickier inflation, higher rates, China and its issues. So I think the question that everyone's trying to grapple with is whether there's more downside that's opening up, or whether we're pretty much going to be in a range where we're probably at the lows now.
I think markets may, in the very, very short term, be a bit oversold and there could be a bounce. I feel this is part of an overall range of, say, maybe around 18.6, 18.7 on the low to 20,200 on the high. That's the kind of broad range. But in that range, I think 19,250, 19,300 may well have been a short-term bottom created. I'm not from a perspective of trading calls or otherwise, but I think the markets may be a bit oversold because, in a sort of a very short period of time, a number of dark clouds have sort of come over the market, especially with the kind of reasons that you mentioned. Having said that, I'm also seeing a lot of protection being built up. FI positions have also turned quite sharply, lighter on the long side. In fact, they've become net short to quite an extent. I'm seeing this this play out even in terms of futures premiums being almost non-existent vis-a-vis stock prices. So given all that, I think in the short run, the markets are positioned with protection built in. And to that extent, I feel the downside may be limited. But there's no taking away the fact that we could be in this range for some length of time for most spaces, barring maybe one or two sectors, which is the endeavor that all of us have, that in markets like this, can we identify a sector that's strong, that holds out, and therefore can lead the next rally, if you will.
Hi, Jakes. Good afternoon. Jakes, I want to ask you about the steel space. You've made this point numerous times that India, is going to do well and the steel sector is going to really perform from here on. Now, the only problem, I think, is that China has become a bit of an issue. In case they export more, that's what could hit prices. Yes, I get the point that input costs have cooled off as well. But would you be a buyer, given the kind of balance sheets we have, given the kind of product profile that's coming out, as well as the expansions that we're seeing taking place across the 3-4 major names?
Well, China has been a problem, and not a bit of it, been a big problem for the last, now almost 18 months to 2 years. Prices have cooled off from, in rupee terms, from 85,000, 90,000 down to 57,000, 58,000. And interestingly, the fact that China is a problem, that metals are cyclical, the fact that prices have come down, all this is well known. Despite that, we have results which are showing margins which are higher and more sustainable than when prices were at 85,000 to 90,000. And I think therein lies the rub. Because when prices go up and you make profits because the end product prices go up, everybody from the government, inflation watchers, inflation hawks, all of them come down heavily on you. And they put in all kinds of measures to bring down prices. At 57,000, 58,000 equivalent steel prices per ton, there is nobody who's interested in worrying about, end consumer, etc., because he's getting a great deal. The problem here is that what is optically being seen by everybody, the big sort of elephant that's being missed, is that margins have turned significantly better for the well-integrated ones. Some of the biggest names have announced results recently, including companies that have shown reduction in debt, near zero debt in one or two cases, and margins are up for the efficient ones to almost 14,500 per ton. So I think if this scenario were to play out, where prices remain depressed but margins are better, I think any manufacturer will tell you that's the scenario he'd take with both hands every day of the week.
Okay, Jakes, just stay on. I want to, get Prashant into the conversation as well. He's actually walked over to the big wall to talk about really what has been the story of the hour. that's caused a stir on the Reliance stock as well. Jio Financial Services will be listing on the 21st of August. Prashant, take it away, I mean, in terms of what we can expect and how this will play out.
Well, so, the stock makes its debut and lists on Monday, that is the 21st. Remember, the price discovery for Jio Financial Services happened, around a month ago, a little more than that. The price which was found for Jio Financial Services in that session was 261 rupees and 85 paise per share. So when it starts trading on Monday, this basically will be the floor in the sense that, it'll be calculated on the basis of this particular price. That's point number one. So it's like a regular price discovery like it happens for a new listing, for a new IPO. At 10 o'clock, it'll start trading on the exchanges. Just a quick check on numbers, right? I mean, this is something we put out earlier as well. This is the equity capital. That is the discovered price. The implied market cap for Jio Financial is about 1.66 lakh odd crores or so. Of course, once it gets to the market, we'll find out what the market wants to ascribe in terms of a value one way or the other. What happens after Monday? What happens after listing? Stock will be removed from all the indices. Remember, Jio Financial all this while has been the 51st stock on both the 51st stock on the Nifty and 31st stock on the Sensex 30. But it's been quoting at a constant value of that 261.5. It's not been trading. But starting Monday, it will be trading, right? Jio Financial will be trading. So listing on Monday and the third day, which is Wednesday evening, it will be removed from the indices. This on the condition that for 2 days, it does not hit any circuits. I mean, the stock does not hit any circuits. If it is, then you go into another 3-day cycle. But once it is removed, it can then make it back into indices depending on the sort of, index eligibility criteria. It's a market cap, liquidity, etc., etc. We just had the half-yearly review, earlier this week. The next actual review will only, I think, happen early next year. But it could happen earlier as well if some stock goes out, etc. So we'll see. The other thing is, this is, again, I mean, just a quick look at what the sum of the parts value for Jio Financial works out to, something that it put out earlier, but I updated because a bulk of Reliance Jio Financial Services value comes from the 6.1% treasury shares it holds in Reliance Industries. So the value, including that 6.1% plus the core net worth, which is the amount of money Reliance has put into Jio Financial Services, minus the cost of that 6.1%. So you add that to the 6.1% stake, taking a 3 times multiple, it works out to 1,37,000 crores. I mean, let's go to the next graphic. It'll tell you that the sum of the parts total works out to 1.37 lakh crores or so. So this is, the short point in terms of how things will pan out. Remember, the listing is this Monday, 21st, and then on the 28th is the Reliance Industries AGM, which is a very important event in the RIL calendar, where, of course, we will wait to hear in terms of Reliance's plans for most businesses, but in particular for the newest entrant into the stock market, which is Jio Financial Services. So that's the listing. Jakes is still with us. Jakes, any thoughts? What this means? Actually, first, a quick word on Jio Financial Services. You'll be able to buy and sell the stock on Monday, and then what it means for Reliance, really, from here.
Well, I'm not, I think we need to recognize that there's probably the biggest player in the space who's just walked in. So I think it's a lot more exciting, not from a stock market perspective necessarily, or not the stock market perspective alone, but to actually look at what kind of disruption this could do in terms of businesses. Not sure of pricing as much, but in terms of, to get credit across to a larger cross-section of India. That's, to me, actually the bigger question to be asked, and the bigger thing to be observed is how disruptive can this become? I know it's been around, but I think this is the first sort of, first flush of public interaction, if you will, that it'll have. So I'm kind of keen to see that part of it more than just a play on the stock market. And certainly, I don't think it has that much to do with the Reliance stock itself.
Okay, so that's a word on Jio Financial. Promises to be an interesting week, the coming one, with that listing happening. Jakes, another trend, and we've asked you this, I think, in June when it was happening. I'm going to ask you again. And this is this trend of huge block trades that are happening, right? I mean, we saw a big one with Fodler just today. Fodler sold out and Chris Cap has come in. So it's a very interesting buy and sell happening. Domestic institutions are buying, mutual funds are buying. What does all of this tell us? I mean, is it a good indicator that we are getting deeper in terms of market depth, participation, etc.? Or does it make you a little worried? Because a lot of the people who are selling out are either promoters or the early investors.
Well, it just tells you that everybody wants to take some chips off the table. So caution, large investors seeking returns, especially given that many of these could be linked also to the new age companies where blocks have been traded, indicates to me that given portfolios have taken a huge beating. I mean, this is the paradox, right? That people kept focusing on the new age economy companies taking off and valuations that they were attaining. And now you have a situation where funding to the same companies is becoming a huge challenge. The secondary market has taken off, but many of these stocks are being now dumped because the overall portfolio of the VC community, if you will, has taken a big beating. I mean, look at the write-downs that some of the top three names have taken. I think they aggregate over 2 years to almost $70-80 billion. So given that, I think they're also rationalizing, they're also generating liquidity by getting out wherever they can. So I think this is a good trend. The fact that Indian markets have been able to absorb this is actually even more heartening. But in addition to this, there are existing companies where, whether it's the Indigo, the Gangwal family offloading or any number of such cases where promoters and their associates are doing it. I think it's a cause for some concern that maybe a lot of this is going to retail hands. Or the silver lining that some of us have been looking at is the amount of retail money coming in and more retail commitment. That wall of money, we've never been able to envisage or estimate correctly. And to my mind, that's the big wall of money that's quietly sort of absorbing this. It doesn't come in terms of large numbers, but is there almost a daily basis, monthly basis through SIPs, etc. And I think it's that wall of money that we have underestimated as to how powerful retail savings can be in terms of acting as not just a buffer, but capital providers to enterprises.
Okay, by the way, I just want to point out that the market is witnessing some pressure once again. When we started the show, it looked like a great recovery, but there's selling coming in on the bounces, and that describes a slightly different texture of the market. Look at the selling. From the top, we've lost good 30-35 odd points. In terms of weakness, it's the same names. I mean, it's the same TCS, Infosys on the IT side, and a couple of the commodity names, Coal India, Hindalco, most of your commodity and metal stocks, ONGC, BPCL, they have largely been weak. That's how it has played out. Jakes, finally, any new interesting themes or trends that you would look out for, maybe once the market cools off? Today, Prashant was having a very interesting discussion on, battery storage solutions, this pump storage hydro sectors, right? I mean, basically the market's looking for new ideas where maybe technology or maybe you can have, something that causes a re-rating or a new discovery. Defense has had that. We've seen that play out on the EV bus stock, so to speak. Anything where we should be looking?
You might have a few logistics-related plays being in focus. I think that's going to be the other one that people are talking about, what I hear. The one big theme which has come, which is set in where funds are slowly positioning themselves, where I think not enough capital has come in, I feel is the pharma space. And the fact that pharma is led by consumption or demand in the US, then to the developed markets, Europe, etc., indicates to me that that space could have multiple quarters of growth ahead of them. Pricing pressures are lower. We are talking about, for the first time, shortages in various markets. We're talking about facilities getting shut down and short-term problems on supply being created. But all in all, I think a combination of better compliance by Indian companies from an export perspective, that's the FDA compliance, faster approvals, and a lot more in terms of the complex generics, the specialities, and probably higher margin products which Indian companies are getting into compared to what they were. I think all of this means that with most balance sheets actually being very close to zero debt or net cash positive, I think you're talking about a scenario where the next few, maybe 4 or 5 quarters could belong to pharma. And yet, as I speak to you, the exposure levels that people have taken are abysmally low. And pharma could be a big sectoral play where money will be forced to come.
Okay, all right. Jake, thanks so much for stopping by and filling us in with your thoughts on the markets. Wishing you a good rest of the day and a good Friday as well. Well, let's move on. Let's take a short break. When you come back, as always, we'll get our technical experts with us. They'll join us for some buy and sell calls. And we'll also continue our focus on the markets. Don't go anywhere.